Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online interview series, now with a presentation. And we want to talk to Claude Bejet from Lausanne, a very prominent mining investor, speaker at a lot of conferences, and with a super broad knowledge in mining. Claude, welcome and good morning to Lausanne. How are you?
Good morning. Great to talk to you.
Yeah, great to see you. And we did this session already in February, I think, this year. And we want to repeat that because the markets are really shaky. The markets have changed a lot. And maybe you want to comment a little bit on the pre-recorded session, how things turned out.
Yeah, well, look, when I called you last week, I was in the same psychological mood as last time in February. When the markets, when my stocks really get slaughtered, and I need to call Jochen so he boosts my morale, and then we say, well, it's so cheap that we have to recommend a few stocks to get back into the game. So that's a little what we've been doing together.
Yeah, that's right.
We had a first bottom in September, nice rally after that, then another bottom in February, and then a third bottom in just recently, and it was pretty severe. So I wasn't too happy about that. I didn't expect a third drawdown.
Yeah, me too. Okay, super. Then let's go in medias res. I bring up the presentation and gold. Is there a life after this? Wow.
Well, that was my state of mind last week. But now it seems that everything is turning. It looks like even the general market is going to have a big rally, and the gold stocks should rally. You have bottom formations and breakouts in most gold stocks, so it's probably a good time to add to positions.
Mm-hmm.
So these are the things we're going to discuss. We went through the everything bubble and the everything bust. Why did gold stocks sell off? And then we'll see why they should be shining again now, and a few stock picking ideas, because if you don't buy stocks, you don't make money. Okay, so it was the everything bubble. And as we know, this was fostered by central banks. When central banks print money like crazy, then you have bubbles. It's always the same thing. And if you take the long term, you can notice that on the long term, the Fed balance sheet correlates very well to the increase in the S&P 500. So basically, the Fed has taken away the punch bowl, as they say, and that lead to the everything bust. The most sizable crash was, of course, in the crypto. That's where there was the most excess. The Bitcoin went from $200 in 2012 to $67,000. So that's probably the biggest surge of anything in any time frame. And since then, it went down 56%, and some things like Luna just collapsed, going down from $120 basically to zero. It was that's the basic background. So that was the boom. We are in a bear market. Why do I say that? Because unfortunately, a lot of people have lost a lot of money. The most popular ETF was the Cathie Wood ARK technology fund, and it's down 70%. The Nasdaq was down 30%. S&P in a lot of markets 20%.
But that's
so
really
basically,
crazy.
I can tell you that this is not a rosy buy the dip scenario. In the gold and silver stocks, we've had downside volatility, but we are still in an uptrend, so we can still be in the buy the dip mode. I don't think it's really possible in the other markets. I do expect now a rally, but rallies in bear markets are difficult. But some nimble people can certainly make money on that way. Another way to do it more safely is probably to sell the rallies. I think this is going to be a long, vicious bear market. So after the rally I expect now, I think it's there's going to be, you know, we're correcting 40 years of excess, so it can be a long, drawn out affair. And also the structure of this first leg down was so deep, so relentless, encompassing everything, that I think long term it's going to be a long and drawn out affair.
How long do you think the bear market could last?
A couple of years, and of course, it's always difficult to predict. It's clear that Nasdaq will go down 50% at least, and after that, we'll have to see. Maybe it goes down another 50%, something that was experienced in the 70s. So I'm more looking towards these types of markets. But you know, of course, we have to see what the market tells us. You know, as we go forward. Another indicator is that although the ARK fund is down 70%. Kathy Wood is still on television. People still believe her. And this is an article just that came out from Bloomberg. Kathy Wood just keeps buying Coinbase and getting more inflows. So that's not the way. You can have a rally after something like this, but it's not the way bear market ends. So sentiment-wise, it's not looking too good.
Yeah, it's still too positive, or what?
Yeah, exactly. I mean, you know, when something is down 70%, you usually don't have, you know, the guy behind it, you know, being so popular. And that's one of the things probably that is hindering still gold stocks, is that even though, you know, most other assets are down, people still believe that, you know, they can buy back Apple, buy back Amazon, and they're not thinking about too much about gold stocks still right now. The biggest bubble of them all, of course, is the bonds. The debt is so huge. U.S. private public debt is 410%, and you have structural sellers. I mean, Russia is basically out of U.S. bonds, but China, you know, will be selling like other countries. So long-term bonds will keep going down. The other bubbles are starting to deflate with interest rates going up. Of course, that's not good for real estate. Okay, so with hindsight, it's always easy. Why did the gold stocks participate in this general sell-off? Well, the general reason are very simple. We were in liquidation mood. Everything went down. I was hoping that that happened in 2008. It happened in 2020. I was hoping it would not be as severe this time round, but it's been following the same script. But as you know, when you have these types of situation, usually the gold stocks, they bottom before the general market. Also, people sold gold stocks because the dollar was up, and quite a lot in a short period of time, something like 10%. Interest rates going up, that's never too good. And then there was, on top of that, the talk of recession. So when you talk about recession, that's not good for gold. But of course, once recession starts to be more obvious, then the Feds, the central banks start printing, and that's of course very positive for gold. There has been also some specific reasons to why gold stocks went down, is that we've had huge production cost increase from the Q4 of last year to the first quarter this year. All-in sustainable costs on producing companies increased by something like 11%. I mean, that's huge for a
So where are we today as average in the world? Was it like 1,050, 1,100?
Yeah, it's around that, probably a little higher, because you know these figures are always a bit understated. But what's unnerving is this, you know, explosion in costs, and it created another side effect. Is basically that fund managers, even gold fund managers, were just hiding into the biggest producers, those who are not putting big mines into production, because you have cost overrun in capital expenditures. So that had a very negative effect, and that's why, you know, exploration companies, development companies, people going into production, these are so cheap now that it represents fantastic value.
Mm-hmm.
So let's be positive. So why should precious metal equities shine again? And it could be now. These equities were down for the wrong reason, in my view, because, okay, the Fed is raising rates, but they're as usual behind the curve. And it's not because you're going to be raising by a quarter point here, 50 basis point there, that you're going to change anything. I mean, inflation went at 8%, and we're dabbling with a couple of percentage. The second reason is that the market expects the Fed to keep raising rates for a long, long time, many, many, many raises. And I don't think that with the amount of debt in the system, I don't think that is possible.
Yep.
And also, Johan, you've been in this game for quite a while.
Mm-hmm.
What's really important is not interest rates increase. Rates increased in the 70s dramatically, and the gold went up. What's important is that real rates are still negative, so that's a huge plus long-term for gold and gold equities. The dollar was very overbought. The situation seems to be reversing now. So what's really different this time is now we have inflation. The numbers are huge, stunningly important. Now, of course, we're not going to keep going up at 8%. Increase. So we've probably certainly have reached a peak now, but there's some structural reason why inflation will be much more resilient. Most economists, and we know they're usually wrong, most economists believe that within 12 months we'll be back to 2 or 3% inflation. I think that's going to be very difficult to achieve, because now we're talking about fiscal and budgetary stimulus, and this goes straight to inflation. And that's the way governments now are going to deal with, economic weakness. The other reason is, of course, we have with this war in Ukraine, less globalization. That will put upward pressure on price. The energy transition is, of course, also an added expense. And the lack of investment in our sector, in oil, in mining. So, oil can go back down a bit, but I don't think we can have very cheap oil anytime soon, because basically we haven't been investing in this sector.
Mm-hmm.
Okay, gold stocks. A rally is here.
Hopefully, yes, it started.
Hopefully. Well, we've been disappointed a couple of times. I hope this one is the right one. Okay, so last time we talked, I mentioned a couple of stocks of interest, and these stocks are about more or less a bit lower than they were in February, so they're probably much better buys now. If you're still very worried about the situation and not too sure that we're going to have a rally now, Westvolt Mining is for you. Okay, this is basically the perfect stock. They have a mine ready to be built, profitable at $1,400 gold. But the main shareholder, the famous Peter Palmetto from Sun Valley, who controls 47% of the stock, he does not want to go into production before gold is at $2,600. So basically, the company has decided to buy back its shares. They have a procedure. So basically, you have a put on this stock, so there's probably no downside. But at $2,600 gold, the NPV is 10 times current market cap. So with probably no downside, you have a chance of having a 5 to 10 backer. Not a bad deal. Caliber, they have a great growth profile, going from 182,000 ounces to 300,000 ounces by 2025. And on top of that, huge exploration in Nevada. They're drilling 70,000 meters, and you're paying this at a 60% discount to net asset value. We mentioned Condor Gold, 1.2 million ounces in Nicaragua.
Yeah, might be a takeover story also.
Oh yeah, absolutely. The market cap is only $70 million. So your price to NAV is a very small 0.15 times. Yeah, we're talking about all these gold stocks because their value. I mean, although the general stock market has gone down a lot, the S&P is still richly valued historically. Same with the Nasdaq, whereas gold stocks are really, really cheap. So. If you buy value, usually get ahead of the game. Minera Alamos, they're going into production right now. They'll probably do 35,000 ounces of production this year, but they'll be at 110,000 ounces by 2024. And their CEO is probably the best mine builder in the world. Kuya Silver. Here also, it's a ramping up story. They're starting to put into production their first mine. And by 2024 or 25, they could be doing 4 million ounces. So today, the market cap is 50. Yeah, that's silver. So for a $50 million market cap, if they can get to 4 million ounces production, you know that you have a lot of room for the stock to go up a lot. Okay, so as we all know, in a precious metals bull market, silver and silver stocks, they outperform. Silver has been very weak, so the gold-silver ratio has gone up tremendously, and silver is really, really, really cheap, and same with silver equity. So since it looks like a turnaround in the general market, let's go for the jugular and let's invest in some silver companies. Of course, you all know that silver is a very, very difficult animal and you can get badly hurt. So the first stocks that I'm going to mention are big caps, so you can trade them. They're extremely liquid. If you see that silver is making a new low, you just get out of the way because we're still in very dangerous markets, and we had a huge downdraft. So we still have to control risk and be a little careful. So some stock picking ideas on silver. First Majestic, an institutional favorite. It's the highest bet at the silver. It's a high cost producer, but production costs are going down. That's a positive. And then the numbers were not too good in the first in the last quarter. They were basically losing a little money. This should change in the second half with production ramp up and lower costs. So the numbers will be better. So you have two ways to make money here: improvement in the fundamentals, and if silver helps us a little, then you're out of the woods. If you look at the chart, you have a nice little, terrible, I should say, it's a terrible downdraft, but now things look like they're turning. Max Silver, that's an amazing, discovery done by the famous explorationist Peter McGaw. And now they're going into production with Fresnillo, their joint venture partner. And they're going into production. They only have 99 million shares. So that's to tell you how fantastic this management has been. They really played the game tremendously well. No debt. Production is going to go up from 1.7 million ounces in last year to 12 million ounces in 2023. So there's a lot of upside. At the same time, the total costs are going down. They also have huge exploration potential in their current, where the mine is producing, on CPO, but also on Deer Trail and new grounds in the Abitibi belt in Canada. So they made a huge discovery. They could make a second one.
Oh, definitely. And I think longer term, they will go with 25 million ounces silver equivalent, right?
Yeah, absolutely. There's this mine will just go on forever. And that's why Fresnillo, who is, one of the biggest silver producer in the world, that's why, they wanted to be part of this fantastic discovery. Avino. So now we're going to more speculative, smaller caps. The market cap of Avino Silver is only $100 million. But in a couple of years, it's possible this company be a $1 billion market cap. Today, they have cash, $11 million. They're cash flow positive because they're restarting production in their first operation. This year, they'll be doing 2.2 million ounces, but it should go up gradually, putting into production La Preciosa, then some oxide tailing, and then increasing the size of the mill. They will do that step by step to avoid dilution. And they could reach something like 9 million ounces. So that would be a significant producer. Very astute management. They bought a huge deposit just near their current mine called La Preciosa. They paid something like $30 million for it. A couple of years ago, in fact, in April 2013, Kerr paid $380 million. So Jesus. When you add that type of value to a company and the company is trading flat on its back with 290 million ounces of gold, you have plenty of upside. Sorry, yeah, silver. Yeah, 20 million gold would be unbelievable.
The other thing would kill the gold market.
Yeah, absolutely. Anyway, I mean, this could, you can see that this could be a 10-bagger. Speculative, but it could be a 10-bagger. I'll finish off these few ideas that you can check on your own. By a small company called Hannan Metals. Market cap is only $20 million, but they are in the top 10 landowners in Peru. So it's very, very big. They have huge potential. They made a joint venture with one of the greatest companies in the world, JOGMEC. They're very serious Japanese operators on their San Martin deposit. They can earn 75% by spending $35 million. They're fully committed. This year, they'll spend $2 million that will go straight into exploration. Quinton Henning, which is, as you know, one of the most famous and most knowledgeable geologists in today's world, believes that they have a sentiment-hosted copper-silver deposit. It's called Kupferschiefer. One of the best example is the KGHM mine in Poland, which is today the world's largest silver mine and seventh mine in copper. They are also exploring the Valiente project, which is 100%. They own 100%, and they think they have, there are several possibilities of finding several copper gold porphyries. And here again, same looking type of charts. Sharp sell-off, and now it looks like we're going up in the other direction.
Yeah, great buying opportunity.
Well, yes, hopefully. So what I think the only thing we can do is hope that these precious metal shares will not disappoint us once more and will shine like we had them shine in the 70s. Well, that's all for our little bubbles here.
Super. Thank you very much, Claude. That was a very compelling presentation, I would say. You really explained it extremely well what is going on these days. But what I'm interested in is, of course, you said Westwall $2,600 is their target to start production. What is your personal target in gold and in silver?
Well, I'm old enough in the game that I know that you never can make any really good projections because look, I don't know anybody who is able to time the gold. Gold is not
time wise, but what do you see this decade? Let's put it that way.
Yeah, look, it's a function of the dollar. Okay, so basically, it's clear that people who invest today in gold and gold stocks will do very well, very well. If you take, basically, it's pretty clear today that, everybody, most investors are on the 40-60 model. Okay, so 40%, 40 or 60% equities, 40 or 60% bonds. Okay, this strategy has worked tremendously well, for half a century. I think this game is over. And what you see is basically when the 40-60 portfolio do well, then the gold does nothing or goes down. But when these type of 40-60% portfolio do not perform, then gold usually goes up something like 20% compounded for 5 or 10 years. I think we're in this situation. So it's a real bull market, and because there's not much other places to go to, and we've seen that recently. Everything went down. And gold has resisted pretty well. By the way, if you look at gold in other currencies than the dollar, it looks even better. So I think gold is going up a lot.
A lot is good. Perfect. Super. Claude, thank you very much for your presentation. I wish you all the best, and hope you timed it again right. This is the third bottom, and that we will see gold stocks and silver stocks shine again.
Yeah, and on the last note, when I ask a CEO, how much their company would be valued at $2,600 gold, they think I'm crazy.
Yeah.
But in fact, $2,600 gold is only 30% above today's price. So of course, gold could certainly go down 30%, but if it goes up, the numbers are astonishing.
That's right. Super. Great. Okay. Thank you very much. Thanks for your recommendations. We will watch that carefully. I really learned also a lot today, and wish you all the best.
Okay, Johan, thank you very much.
Thank you,
Nice
Claude.
to see you. Bye-bye.
Nice to see you. Yeah, ladies and gentlemen, there was Claude Bejet, sophisticated mining investor and speaker at a lot of conferences, and I think there was a great explanation of the situation these days and today, what's going on in the markets. And definitely the bubbles are busted, and gold and silver will shine again. Make sure you have some good stocks in your portfolio. Maybe you have a look at the ones Claude just was talking about, but there are obviously, of course, other good stocks out in the universe here. But make sure you own some, and some physical gold and silver for sure as an insurance. Thanks for watching us, and bye-bye from Switzerland.